Alright guys, I want to show you the setup that I've been using to get at least 10% trades or more. I usually sell too early, but these work it's worked 100% of the time for me, but I don't want to say that because it's going to mess up one time at least, but it's pretty good risk reward, so it's good for new traders, good for experienced traders. You probably already know this if you've been trading for a while, and if you haven't traded for a while and you have any comments, I'd appreciate them. So I'm going to be showing you the entries and when to get out if it cracks certain areas, or when it starts to look bearish, when to get out. And I have tons of examples for you here, so enjoy. So first, what you need, well, I'm going to call this predicting a short squeeze, because basically making money off when people get squeezed. Because these stocks are junk. They're not good. You don't want to hold them for more than an hour because they're coming right back down. There'll usually be good shorts around, this is my favorite time to short, between 10 and 12. So these are usually good shorts, but you don't want to get in early. That's why they say don't short the first green day, because it's dangerous. Well, you can short, but don't hold it overnight either. But sorry, let me get into this. So predicting a short squeeze. So the first thing you need is massive volume. So I think this traded, I can't remember, it's probably around 1 million shares pre-market, and already short sellers got squeezed. So the daily chart on this is horrible too. This thing never holds its spikes, so it's going to be a short for a lot of people. So when you see massive volume and there's tons of shorts in it, you know it can squeeze. So if it doesn't have volume, it probably won't work. Thing's probably just going to go right down, barely move. So yeah, you get good volume, usually get a pop out the open where you get a lot of shorts in. So I like to see this area here where a lot of shorts are getting trapped, or they get in here and it comes down and they're all happy and it fails to crack support. So yeah, that's another key thing. So first thing, big volume. Next thing, holds key support from pre-market. And third thing I like to see is consolidation, where it's just soaking up shorts, as I like to say. So you see it come up here, you're just watching, you're not going to chase this. Comes down, holds support, maybe you'll buy in here for a quick scalp, but dangerous. Comes up, can't get over here, and then it comes down here and it fails to crack this support multiple times, and it starts putting in these higher lows. And this is the pattern right here that I like to see. And you'll see it many times on all these charts that I'm about to show you. So when you see this, that's when you want to get in. You want to get in somewhere in around here, and when it does crack this support, that's your risk level. Or you can even get out if a candle confirms. See, these are just wicks. It never actually closes below this support level. So if a candle closes below this support level, maybe you'll get out. But the fact that it holds it every time, and each candle is putting in a higher high. So if you're short and it's not cracking support, it's putting in these higher highs, you're most likely going to cover, or you're going to have your stop loss in place and just let it hit the stop. So a lot of the times these traders will put the VWAP, they'll put the stop loss right above VWAP. So I don't have it on this chart, but I would have got in somewhere around here, risking maybe 10 cents for maybe a 40 or 50 cent, or in this case 75 cents. Sorry, almost $1 to 10 cents. That's pretty good risk reward. So I'll get in somewhere here, and then once these stop losses start getting hit, you'll see this huge run up, and this is just a short squeeze. And that's where you want to take profits. You're not going to be holding thinking it's going to go to the moon like dries. You're going to just sell into strength. Well, that's what I would do. I'm not going to tell you what to do. You're going to do whatever you do, but your best bet is to sell on a strength. I'd probably even sell right here in case it double topped. And this is my favorite time to short. I thought I'd mention that. Is around here. Starts putting in this downward trend. You want to catch the backside, but yeah, that'll be in a different lesson that I make. So that's the pattern you will see many times, and I'll show you. Here it is again, same stock. A few weeks later, gapped up, had over a million volume. It doesn't have to be a million shares traded pre-market, but if it's around a million and it's a low float, if it's a low float, that's a lot better too. So I was watching this and I seen it putting in all this choppiness. Don't buy it here when you have resistance here. I've made that mistake before. You do not want to do that because you'll get this. Do not be in during that. So it failed to get over here, over this resistance here. Popped up, trapped some longs, maybe got some shorts in. The whole time here it's getting shorts I was in too, especially here. So these short sellers get all happy because it's coming down. Comes up, fails to get over resistance. More shorts get in there. Then it starts putting in this trend of the higher lows. And I would have bought in here. Wherever, it doesn't matter. As soon as if it fails to get over this and it starts putting in these candles that start going downward, you'll want to get out right away, maybe risking 10 cents. If not, you'll hold. You'll hold till it gets to VWAP. If it fails to get over VWAP, get out immediately. Abort. Get the hell out. Don't wait. Sell right away, even for a small profit. So if it fails to get over, you know stop losses aren't getting hit. It's going to come right back down. No one's buying it. You're not betting on people to buy this stock. This is garbage. So once it gets over VWAP, this is where VWAP was. I remember. This was yesterday. It hit all these stop losses. And I knew someone in the chat room too. They were short. And they had their stop loss around 65, 66 or something. Yeah, I think it was 66. I bet you tons of other people did too. So once it hit this, man, take profits. Look at that. What? So you get in on these higher lows. You get in, say, 255. Risking, say, 245. Actually, I wouldn't even risk that much. I'd risk to 250. Get in at 255. If it comes down to 250, just get out. There's other plays. So you're risking 5 cents. Not if it puts a wick down to 55, or sorry, to 50, and it comes back up, I wouldn't get out. But if a candle confirms, as in it closes on 50, then get out. But otherwise, you're holding. You're risking 5 cents. Hits the stop loss. You're in a 55. You get out into this. You probably get out in here in case it double topped. You're in at 55 and you're out at 280. What is that? 25 cents. Yeah, 25. Maybe even if you're ballsy, hold till 290. That's over 10%, and that's quite a bit of money. So I'll show you another example. GLYC is probably a better company, higher priced. So gets all these shorts trapped. And I'll try to be quick in this video too. I know a lot of people, you don't like to watch long videos, so gets all these shorts trapped. Key support is right here, I'd say. Has some support up here too, but key support here comes down. If I was a short seller and it didn't crack there, I'd be thinking I'm gonna get out. I'll get back in if it comes back up. I know a lot of people just set a stop and they'll let it ride out. So it starts coming back up here. I can't zoom in, sorry guys, but I probably can, but it puts in these higher lows in this uptrend. It's a 5-minute chart, so it looks a bit different, but stop losses get hit and you get this massive volume come in. All these stop losses getting hit and you take profits away. You get into, so you get in the trade on support around here. It's probably around $10.50. You're risking maybe 30 sorry. You're risking maybe 30 cents. So maybe a couple percent. And you're selling into this resistance here at, let's say, 12. That's over 10%. That's $1.50. to 25 cents. That's like I don't even know, like 4 to 1 risk reward. So if you're really ballsy, you're gonna hold all the way up till 15. Yeah, that's just crazy though. I know some people do that, but that's just crazy. So another example. Get the gap up. You know, shorts are stuck. This had a mil volume. Pre-market. If this was low volume, I probably wouldn't even have been watching it. If it was like 500K and it was a 2 mil float, I'd watch it. But since the float was like 8-9 million, and it gets a million, it gets 1/9. I don't know if that's a proper term, but 1/9 of the float traded pre-market. You know, a shitload of, sorry for the language, but you know, a ton of shorts are trapped, or they're getting into it, expecting it to come down. So you get this washout as a 5-minute chart. It confirms, when the candle confirms, it confirms over this support, holds key support. You can even buy in right here if you want. 3 up to 350 something, up to 375. That's 75 cents, and you're risking, if a candle confirms here, so you're risking maybe let's say 20 cents, 15 cents. That's over 3 to 1 risk reward, or it is 3 to 1, I think. So, but this is the real pattern right here. When it comes back down, shorts get happy. As you can see, this is all the same, like the same chart. Shorts getting happy, some longs are getting trapped, which I feel bad for those guys. That's why I always sell into this resistance, because you know people bought this. But it comes down and starts putting in these higher lows, higher highs. Buy in here, 325. Risking, say it starts a downtrend, you're risking, let's say 10 cents. And you sell into this huge pop. Buying at 325 and you're selling at 425. $1. How is that? 10 to 1 risk reward, right, for the ratio. So, and then it puts in this wedge pattern here. I don't know, I'd be kind of scared. Probably wouldn't touch this after, but I'd probably short it up here since it's my favorite time to short. So let's see if I got another one here. This is one of my favorites because you get these shorts in here. They're pretty happy again. I don't know, this part doesn't matter, but you get all these short sellers here. They get all trapped, or they get happy and it gaps up. Now they're trapped. There's tons of them too. And tons of people are shorting this junk. It's junk stock. It comes down and it holds this key support level. It fails to confirm a candle under it. So shorts are looking at that and they're saying, this isn't looking too bearish anymore. We're already underwater. We're going to start covering. Maybe they shorted here. Comes back down to where they shorted. They're going to start covering. Once it starts to put this, it probably had an uptrend on the 5-minute or the 2-minute chart. That's when you're going to want to buy in. And as you can see, this thing just ripped. Like all these short squeezes, they just fly. All you have to do is wait for this. Wait for this huge volume. Wait for a gap up and you know shorts are stuck. Like every time that I see that and I trade it, it works every time. Like I just don't get it. Well, I do get it, but it's just like a perfect setup. It's never failed once for me. Just because you gotta be patient. You gotta wait for that key support to hold. If it doesn't hold in the cracks, you're not buying in, and it's probably, maybe you'll want to short it then. But like, it's just a good trade. So let me come down on more examples here. This is, I think I showed that one. Another GLYC one. So it has this huge pop. I like to see this too, a huge pop. A lot of people are just shorting the hell out of this pop. See, it has 2 mil volume. 2 million shares traded in a 5-minute candle. So the float's 24 million. So traded a good amount. And it puts in this, it fails to get, there's support here. And it fails to crack. So the shorts, it starts to uptrend and short sellers are going to be like, oh shit. Confirms over this resistance here. This candle confirms, as in it closes above it. You don't buy the wick that pops up above. You wait for it to confirm. And then once the candle closes, maybe you'll buy in maybe at 760, 70. I don't know where this, I can't really tell. And this thing just rips. Buy at 70, 70. Maybe you're ballsy and you'll hold till 11. That's if you're crazy. But that's what, 30%, 20%, who knows. But here we go, we got the pattern again. This is one I actually bought and lost money on because I didn't look at the 5-minute chart and see this support here. So this gapped up, this had huge volume pre-market, massive volume, and this isn't even that low of a float. So the day started, 5-minute candle has 3.2 million volume, and it's getting all these shorts trapped. Like, it looked like a perfect short. I got in long on one of these wicks like an idiot. Didn't even confirm over. That's what I meant by needed to close over the resistance. So it didn't close. It kept going down. I thought support was at 108 because on the 2-minute chart, that's where it looked like it was. So when it cracked 108, that was my risk level, and I got out right away. But really, 105 was support. It held 105 and it started squeezing up, and there was tons of short sellers in this. What is this? 3 million. There's probably like 8-9 million shares traded right here. Started consolidating and all these short sellers got in. Squeezed the hell out of them. And once again, this is a good time to short here on the backside. I can't get over here, so that's a different lesson though, so I'll save that. And so that's that pattern again. The 2-minute chart looks better on that one, but this is also the next day when all these shorts are trapped and it gaps up. Tons of shorts got trapped in this. People who shorted here, shorted all here, and tried to swing trade it. Or they were stuck and they're like, you know what, I'm going to hold till tomorrow and it's probably going to gap down. But nope. There was just too many shares. There's too many shorts I was stuck. Squeezing into the end of the day. Gaps up. And just rips. Just like, see, these are the short squeezes that just destroy shorts, and they just make such good opportunities for longs. Like FMBC when it ran like 300%. All that, like people try shorting the hell out of it and they just get squeezed. So here's another example. I think I showed this one, but I showed the 5-minute, but this is what you want to see, this consolidation. That's where you want to buy in. Higher lows, higher highs. Shorts trapped. Not really trapped actually, they're up, but it held this support. This is the key support level here. Support here, or resistance here, support here 3 times, a 2-minute candle. Could have even bought there for that squeeze because it just couldn't get under. You could have banked off that squeeze, and then this one here starts. This is what I like to see. It starts to consolidate and just shorts. What, like 10 million, 20 million shares, probably like 10 million, all traded right here. A lot of those are going to be short sellers. There's no more shares to short. At brokers, they're all being used up here. And then they got, I think the VWAP is right here. And that's where they put their stop losses most likely. So once they hit these stop losses, so what, you get in at what, 325? I think, I already said this one. I already showed this one, so you bank off of this pretty much. It's so low risk. And then this one, you can't really see that well, but it failed to crack this support. And also I'm going to show a bunch of examples that didn't work because they didn't hold support. So really they weren't the proper candidate for this pattern, or to predict the short squeeze. But it failed to get under the support level here and just squeeze the hell out of these shorts. Sometimes you don't need good news. All you need is a shitload of volume, a lot of an alright chart. Good enough news for longs to chase and buy, but bad enough chart maybe for short sellers to pile in because they're like, oh, this thing's coming down. It's coming down right away. Yes, it did come down, but it ripped first. So, and another example. This was from yesterday. fails to crack this support here from pre-market, some pretty good volume coming in here. This could have failed, but couldn't crack the support here. And I remember this, it came down, it wicked, kind of stalled out. And I probably would have bought, like, the tape stalled and you started seeing buy orders come in. Probably would have bought maybe at 160. Because I should have, but I was also watching CLSN. So it came up, started consolidating, not as much as I wanted it to. But I bought in right here, 170-ish. Actually, I think I bought in at 177 when it broke out. But I wanted to buy in here in anticipation of this. And I was going to buy at 172 maybe. And if a candle confirmed below, I would have risked maybe probably 8 cents. Would have sold for an 8-cent loss per share. But instead I held. And I sold at 195 for 10%. But with these huge squeezes, when you see 700K volume on a low float, and it starts to squeeze up like this, what my original plan was to sell when it started to test the EMA. So I would have sold up here at 210 when it started dropping down here, or here at 220. If I was still holding at 230, I would have obviously sold. That's huge profits. And again, the perfect time to short around 10, 10:15, 10:30. You get this same little pattern here. And alright, that's it for the patterns that worked. Now I'll show you the patterns that didn't work. So you got HTGM, key support here, support here, support here, support here, support here. Ripped right through it. And this was one I actually lost on. This is when I didn't really know this pattern that well. And I was just blatantly dip buying a stock thinking maybe it could squeeze. Didn't have a lot of volume, too much volume pre-market. Dropped down and didn't hold any support, and I was like, you know what? I'm thinking in my head, it's bouncing here. I should buy here. Because maybe it can squeeze up. It already dropped like 60 cents. What was I thinking? It didn't hold any support. No one was buying it. Shorts aren't covering. So I bought in here at 375 and just got annihilated. So that's a good example of when it doesn't hold support, it doesn't start to stall out, hold support and start putting in this green candle. And when it comes down like 60 cents, don't think it doesn't get any consolidation towards VWAP or nothing. That thing's done. So RGSE, good example of, actually if anything this one held support here and then squeezed up. So that's not really a good example of a fail. This one actually was a good one here. This one I bought today. So the day before, I had this huge run and a bunch of short sellers were in it. Then it gapped up above where the short sellers got in, so I know they're underwater. So I know they're going to cover at some point. I know short sellers are getting all in here. I had 2 million volume pre-market. Put in this huge wick here. Comes back up on the 2-minute and it closes above support. Perfect. When you see it close and then they put this green candle in, what you buy when it breaks out the high did. I bought it at 103. I think it was like over here in anticipation of this. Kind of expected it. And I sold at 115. Then, this is actually a good example of it not working too, because when it comes down, it starts to consolidate. It's not putting in higher lows. It's putting in lower highs. I'm still watching this for a squeeze. And if it started consolidating up, like CLSN or SP or any of these, towards VWAP here, all these short sellers, 3-4 million shares, maybe a quarter of them are short sellers, they're going to have their stop loss here. And if it hit that stop loss, if it consolidated up, I would have bought here, hit the stop. As you can see on the other charts, it probably would have ran a 130 or 140. So that one didn't work out. NAKD. This one, actually I'll go over this one first. It just looks just like HTGM, and I used to buy this here back when I first started trading. I was like, oh yeah, I did buy. No, didn't hold any support. Didn't hold the support. If it held this, started growing up, that's a buy. But no, straight down. And then you got NURO, squeezed at the open, shorts got in, started consolidating. I bet you it VWAP was right here. It couldn't confirm over it. Just volume died out. Held support, but just didn't give those higher lows, give just a choppiness. Huge washout, long stock. That's just a scary situation. So yeah, that was a fail there. And then you got NAKD. Came down, held support, popped up, couldn't get over resistance, and then just dropped. And if it held support here like it did twice and it started curling up, consolidating, shorts getting trapped, or shorts thinking they're gonna win, but start getting trapped, and then hits VWAP, hits the stop losses, and maybe test the high day. But no, it failed. Couldn't hold that support there. Couldn't consolidate here. If it held here, that would have been a good sign if it started to curl up. That's why you need to give it time. You can't just see it come down, put this green candle in, oh, I'm going to buy. You gotta see the higher lows. Maybe if you did buy here, you're going to sell right here once it cracks. So, yeah, I hope any new traders that are looking for a certain setup that they try this one out, because I see it almost 4 to 5 times in 1 week. And sometimes, or most of the time, you'll get these huge squeezes. I usually just take 10% off. I want next time off. If I see that major volume coming, might try and squeeze 20% out of it. But I like to take profits right away. I don't know why. It's because I made losses and I don't want to make more. So, yeah, I hope you guys enjoyed, and I hope you make some money off this pattern. And that's it. See you guys later.